Hey everybody, we're going to take a look at NTRB. We're going to find out what's going on with them. We're going to find out why they were up 150% on Friday. We're going to look at their financials. We're going to figure out the revenue multiple. We're going to find their lockup dates for shares and the possibility of an offering. Let's get started. Okay, so doing the revenue math, this is their last four quarters: 348,000, 433,000, 213,000, 283,000, which equaled out to be about $1,278,270. So that is their revenue. Their income, they lost $4,660,000. Currently, their revenue multiple is 61 times rev. Whenever you take into consideration, let's go here. We'll go here. Market cap was 78,360,000 as of Friday's close. So their revenue multiple is 61, right? Isn't that what I said? Yeah, 61. So that means that right now they are trading at 61 years worth of revenue. Yikes. Okay, so what happened? NTRB stock more than doubles. This is going to tell me I need to subscribe. I don't want to subscribe. Okay. NTRB Incorporated issued full patent from the Korean Intellectual Property Office for its abuse of misuse and misuse deterrent transdermal system application. So this is what caused them to spike. Now you might be saying, okay, why did that cause them to spike so much? Okay, so this could be another revenue source. And that's great for the company, but we don't see that yet. We don't see that yet, and we won't see that for a while. The reason it spikes so heavily is because there are, if we look at this, I'm going to go here, page 24 on here. Let's go to page 24 first and look and see what we got. All right, page 24. Oh, well, that's the kind of scary part. Okay, let's go to 57. Maybe it was 57. I think 57 has their lockup. Am I right? Maybe not. What did oh no, 57 has the percentage ownership, 64. Sorry. All right, we're going to get it there. Okay. Lockup agreements. All of our directors, executive officers, and principal shareholders have agreed that for a period of 180 days from the date of this prospectus. This prospectus was written on October 1st. That would put us October to November, November to December, December to January, January to February, February to March, March to April. 6 months, 180 days. Right? Yes, right? I think that's 180 days, 6 months. Yeah, 6 times 30. We're going to say 180 days. So is 6 months, April 1st. So locked up shares until April 1st. We scroll back up here and we'll go to 57, which is going to tell us how many shares are locked up. Okay, 57. All right, 40% of shares are locked up, 2,596,000. That percentage is figured off of the 6 million. Am I saying that correctly? I think there's like 7 million total shares. So just know that however many shares are outstanding right now, 2,596,000 of those are currently locked up until April 1st. So that's the good part. This is why on just very little news, the stock is able to shoot up because there's only very few shares trading. So you need to understand that. That's why it's shot up, is because whenever you have very few shares and there's all of a sudden this interest or demand, we start looking at supply and demand. So if there's only a few shares, only a small amount of shares, and demand shoots up, it's easy to get that stock price up. Okay? So that is why the stock is up 150%, currently trading at 61 times rev. Me personally, right now, looking at just that, I am cautious. I'm cautious about getting in, and I'm cautious about getting in because I don't think the company is worth 61 years worth of revenue. Now, this kind of becomes similar to what I was talking about in previous videos about SOPA, Society Pass. The numbers don't look great, but if you get enough short to get into this at, and borrow shares at $10 a share, whatever it is, to borrow shares at $10, and you don't have people losing interest in selling to make it go down and to give shorts a heaven like gate to enter, then you can do a short squeeze. And with the short squeeze, it doesn't actually, you want the numbers to look really bad because you're going to have more shorts interested. But then you know that you're holding this not for an investment but because you want to see the shorts have to cover and shoot the stock up. Once the shorts cover, the stock goes up, and because they're having to buy the stocks back that they borrowed and sold, because they have to give them back. They want to give them back because they don't want to be too far in the hole. So that is something that you could benefit from. But in a short squeeze, the risk goes up on both ends. Risk goes up for shorts, risk goes up for the people holding the shares of stock. Now then, the thing that could really benefit shorts in this is if the people at NTRB, Nutriband, decide to do an offering. And you may think, oh, well, they won't do that, but the possibility is there. So let's look at what they say in the prospectus on page 24, I'm guessing. Let's go back up there. Sorry about the delay. Come on here. We're getting closer. Okay, raising fund by issuing equity and convertible debt securities could dilute the net tangible book value of our common stock and impose restrictions on our working capital. We anticipate that we will require, in addition to the net proceeds from this offering for our business, we require funds in addition to the net proceeds from this offering for our business. If we were to raise additional capital by issuing equity securities, meaning issuing stock, issuing shares of stock, issuing shares of common stock. So that is an offering. Whenever I talk about offering, that's what I'm talking about. If you are new to this, you need to understand what an offering is. A company can, especially if they list in their prospectus, they can set it up to where they can list an offering and do however many shares, and they don't need your approval. They don't need shareholders' approval to do an offering. This could dilute the shares, meaning that people who own the shares, obviously because there's more shares now, the value of those individual shares will go down. And that all depends on how much they decide to offer. Either a loan or a connection with non-equity financing, the net tangible book value of the then outstanding common stock could decline. If the additional equity securities were issued as per share price less than the market price, which is customary for private placement of equity securities, the holders of the outstanding shares would suffer dilution, which could be significant. Further, if we're able to raise funds from the sale of debt securities, the lenders may impose restrictions on our operations and may impair our working capital as we service any such debt obligations. Okay, so there you have it. They can do an offering. Now, if you are in the pre-market, if you are in pre-market trading, your risk is higher for an offering happening. I'm just being honest. So if you are trading in pre-market, they can announce an offering. And it most likely would happen before 7 a.m. Eastern Standard Time. There's still a likelihood, it's less likely, but there's still a likelihood that they could do an offering after 7, in between 7 and 9:30 in pre-market. That's less likely than before 7 a.m. Even less likely is them doing an offering during market hours. I have never seen anybody do an offering during market hours from 9:30 a.m. Eastern Standard Time to 4 p.m. Eastern Standard Time. I've never seen it. I'm not saying it's not possible. I'm sure it probably is possible. I think that they'd have to jump through some more loops to be able to make that work. And it doesn't usually happen that way. Now, So you're less likely to see an offering during the business day, during the market trading hours. Now, come 4 p.m., usually in between 4 and 4:15, there can be an offering. It's more likely, again, same likelihood as before 7 a.m., that there could be an offering. If there's an offering and you are in, a platform that doesn't trade after hours, then you are stuck with whatever happens. If there's an offering and it ends up being at 5:59 and you're on Robinhood and Robinhood's hours end at 6, you're stuck. You don't know. There's no way to control that. So understand there's a high risk there. Now, then there's also some likelihood that there could be a short squeeze. But you have to realize that there has to be more energy behind it. There has to be more excitement. There has to be word of mouth that this stock has 40% or however much of it locked up. So if that were to happen, you could benefit greatly. There could be, if you get enough energy behind a stock that you are doing a short squeeze on, you can push the price up. You bring in shorts because the financials are not great, which the financials right now are not great for Nutriband. You could then pull in shorts who short the stock, borrow shares, and then sell them back, or then sell them and then buy back in at a lower amount and take the profit. And you could get enough people to believe in this that they could short it, and then, or get them to believe there's going to be an offering. And then it brings in more shorts saying, oh, well, this $10 won't last. I'll borrow the shares now. I'll get back out at 6. I've made profit. They made $4 a share profit. Good for them. Bad for you if you're in holding. So understand that there's a lot of risk here getting in. There's also risk shorting because there could be more news, or there could be other bigger talking heads saying, get into Nutriband and this is short glory. We can really do a short squeeze here. And if they do that, then the stock could obviously short up. Some of the people who push stocks, who do pump and dumps, have 1 million followers. If 10,000 of those buy, enough shares, that pushes the stock even higher. Shorts end up having to cover, which makes the stock go even higher, which brings in more shorts. It just is a vicious cycle. So, or a great cycle if you are on the end of being in the stock and it getting shorted and having a short squeeze. If that doesn't happen and the shorts win, then the stock can fall off a great amount and can get pulled down, especially if the company decides, hey, we need to do an offering at this price so that we can get money, because we need money to survive. We need money to keep the business going. And they can do that. And it doesn't matter that the company leadership shares are locked up or whatever. They can do that if they want. It doesn't stop that from happening. That can still happen. So even though the shares are locked up until April, however many shares, 40% or whatever we saw, the 2,500,000 or whatever it was, even though those are locked up, it doesn't mean that there can't be an offering. And if an offering happens and you're shorting this, then you benefit greatly. Yeah, if an offering happens, and because then the shares go down and you can then buy back at a much, much lower rate and make, it'll probably go to $3 a share or $2 a share, something like that. Then you make $7 a share. That's 70%. That's pretty awesome. So either way, it's very, very risky. So proceed with caution. I can't tell you to buy. I can't tell you to sell. I can't tell you to get in or not get in. I can tell you I'm not your financial advisor. I can tell you there's a lot of risk either way with this stock. I can tell you I'm avoiding it. I'm not getting into it. But you do what you want to do. You know your risk tolerance. You know what you're doing and what you're getting into. And I wish you the best, regardless if you're doing short or if you're doing long don't do long. Well, I wouldn't do long. I guess you could do long if you want. Or if you're trading this stock, just know that there's a lot of risk there. And yeah, that's all I have. I hope you have a wonderful day. I hope it's profitable, that you have a green day, and I will see you all very soon. Love ya. Mwah. Bye.